Property Group Hyprop released its first half results this morning. Tumisho Grater sat down with the company CEO Pieter Prinsloo to explore the numbers. Let's take a look.
Our total investments in South Africa is around about 25 billion rand. At the moment, we don't have a very active development program in South Africa, mainly because the current situation we operate in is quite mature and we don't take development risk in South Africa. So it's mainly in South Africa, we mainly focus on our existing portfolio in terms of smaller refurbishments and extensions. And to that extent, we've got approved projects of about 112 million for the rest of our financial year till June 2015. But for the rest of Africa, there we do take on development risk, and there we're looking to increase our developments further. As you mentioned, we've invested 2 billion to date, and we've earmarked to invest at least another billion over the next year to year and a half.
The headlines have been quite negative around South Africa. They talk about load shedding, they talk about political uncertainty. Operating in this environment at the moment, do you share those sentiments, or are these newspaper headlines that we're seeing just too negative?
Yeah, to some extent it does affect us, but not significantly. We believe we've got a very good quality portfolio. Being invested in large shopping centres, they are quite defensive, and there we still see fairly good trading density growth coming through. And also, to some extent, there might be a bit of an upside as well if we can retain lower fuel prices, lower inflation, interest rates doesn't go up. That can help the consumer in the market as well.
A lot of the analysts, when we talk about the property market in South Africa and we look at office in particular, they'll say there's been an influx of that. If you look around Sandton, there's buildings everywhere. So I'm looking at your vacancies, and that's reduced to about 6.6%, where your retail has increased marginally. Would this then paint the picture that analysts have always been telling us?
The office market has been tough, especially over the last 12 months. Fortunately for us, our portfolio that's invested in offices is very small compared to our shopping centre portfolio, so it hasn't impacted us significantly. I think the good news for us is that we've been able to reduce our vacancies down to 6.6%, and that does help. But I think generally, tenants tends to relocate and migrate more to more upmarket office developments, especially those that's happening in Sandton.
Of course, having the right tenants is very important. There are just the newspaper reports talking about the Aircon group and that they may be needing to get rid of some of their non-core assets. Will this at all impact you?
Yes, we've been in close discussions with Aircon, and we've got a little bit of idea what they're planning to do. I think if they retain their focus on their clothing, it can only help. We've got a number of stores that has been mentioned in the press today with Boardmans and CNA. But fortunately for us, those stores are all in good positions in our malls. So even if I didn't continue in those brands or those shops, it's fairly easy for us to relet those shops.
Mm-hmm. Now, having these tenants, you obviously need to make sure that you've secured certain contracts. Your escalations, how are those looking?
Our contractual escalation is still good. It's still intact. It's around just over the 8%, similar to what we had last year. Our rental growth has slowed down a little bit, down to about 5.8%. But it's also a bit seasonal. We did a number of short-term leases over the December holiday periods, just not to have vacancies during that period. But we are working on reletting those shops, and that should support further rental growth.
Let's move outside of South African borders and talk about the rest of the African continent. You mentioned 1.5 billion. Are we talking east, southern, west? Where are we going to see this money being
allocated? At the moment, we still got 2 development projects ongoing in Ghana, so that's West Africa. And in the future, we also would like to extend our one of our existing shopping centres there, Accra Mall. So our focus is at this point in time, in terms of development spend, is mostly focused around Ghana. We also got Manda Hill in Zambia, which is very successful. And in future we might want to expand that center as well, even though on a practical side is a bit more challenging, but it's also a very successful center for us. So currently we're only in Zambia and in Ghana.